Hello and welcome from Santiago, Chile, to this episode of Crossing Borders with Nathan Lustig, where I have conversations with entrepreneurs doing business across borders and the people who support them, with a focus on those with some connection to Latin America. This episode is brought to you by LatAmList.com. If you like this podcast, you'll enjoy LatAm List's daily tech news reporting. Also, check out my book, Crossing Borders, A Venture Capitalist Guide to Doing Business in Latin America. You can find it on Amazon. My guest today is Johanna Posada, Managing Director and founder of Elevar Equity, an impact investment fund with focus on fintech in Latin America and in India. Originally from Mexico, Johanna was always interested in how investment could help the bottom of the pyramid. And after getting involved in microfinance investing in 2004, she's become one of the leaders in impact investing in the region, managing 4 funds with $270 million under management, multiple exits, and millions of people impacted by the companies she's invested in. We cover her story of how she got into investing, the progression through 4 funds, and lessons learned from each fund. We also talk about the fintech markets, foreign investors looking into the Latin American investment scene, and how Elevar will continue to drive and grow impact investment in Latin America and India. I hope you enjoy my conversation with Johanna Posada. Hey, Johanna, welcome to the podcast. Thanks for being willing to do it.
Great, Nathan. No, lovely to be here.
So where are you in the world today?
I'm actually in Seattle, surprisingly, because I'm usually on a plane. But this time around, I'm in Seattle.
And are you based in Seattle?
I am based in Seattle. Most of our team is actually on the ground in Bogota and Bangalore, but I'm in Seattle.
So tell me a little bit about Elevar. What do you guys do?
Great. So Elevar is basically a fund management company. We call it a human-centered venture capital firm. It targets investment in transformative and scalable businesses focused on underserved customers. We work in emerging countries in India and Latin America. We've managed 4 funds, over 270 million assets under management across those 4 funds. And through the 11 years, we've established what we call the Elevar method of investing, if you want to call it somehow, and democratized about very essential services like financial services, low-income housing, education for over 20 million customers, investing in 31 companies.
And what regions in the world do you invest in? You mentioned you have offices in Bogota and Bangalore. Where do you invest?
We invest in India and Latin America, and then in Latin America specifically, most of our investments are really we have regional companies as well, but it's Mexico, Peru, Argentina, with some crossovers to Brazil as well.
And how did you get into deciding that it was going to be India and LatAm? It seems like the markets might be, or the cultures might be fairly different.
Well, let me first start saying that what's been interesting through this journey is that if I'm looking at the customer that we're focused on, which is an underserved customer, call it in the rural area in India, and I'm standing in a rural area in Peru, I would say that there's a lot of differences. The services that they demand, the quality, what are their basic needs, what are their aspirations, how they're allocating their wallet. Those clients actually are fairly similar, and I would say they're even more similar than, say, a Peruvian, in Lima, that has just kind of different needs or access to different networks. And so, what we realize is our thesis applies really well across the geographies. There are some differences, and of course, our strategy will consider those differences. But in terms of the clients and some of the business models that we've seen, surprisingly, we don't see as much. And then there's a lot of learnings that you can also bring across geographies. But really, the reason why we started on both geographies goes back to our origins. So all my partners and I came to the microfinance field around 2004. So before there was really this big commercialization of microfinance. And we realized there was a huge opportunity to back, scalable, well-run microfinance companies around the world. And it's not surprising that we ended up in India and LatAm, because when you look at the development of microfinance, really those were the 2 regions that started having the most momentum and also some of the companies that had the readiness and the right products, and were innovating in terms of the products to deliver financial services, specifically loans to low income individuals. So it was very natural to start in those two geographies.
So I'm going to jump into your story on the journey, and then we'll get back into the Elevar story. Where are you from originally?
I'm originally from Mexico, so born and raised in Mexico.
And did you always know that you wanted to get into investments and impact investments specifically, or is it something that came up in your career path?
It definitely, I mean, I would say my career path has definitely been much more organic. I always knew that I wanted to work in something related to economics and development. That's been my passion. I studied economics as an undergrad, and then I worked at the central bank, really focused on mostly the financial sector and how to make it more inclusive, how to make it more efficient. For example, access to your own personal data and credit bureaus, and we revamped the bankruptcy insolvency law. So really kind of setting up the framework for financial services to work better and be more inclusive. So that was always my passion. I switched to finance and corporate finance, but it really 2004 again was an interesting year because I came across, and I had already known about microfinance, but it was just a fascinating sector to be at because it was kind of the intersection of social and business, and all my kind of my partners and I came from a business and commercial background. So it was kind of the ability to bring that background into a sector that we were realizing had huge impact. And at the beginning, it really wasn't about a fund or investing. It was about how do you scale this sector. And we realized that equity and investing was a key component of that. And that's really where our thesis started to evolve. And we just realized that there was a huge opportunity in what is now called impact investing. Back then, frankly, it wasn't even a coined term, right? And so we were just, I think, very early, new. We took a lot of risk in 2004, raising a small fund, a $24 million fund to invest in high potential microfinance companies, converting some nonprofits to for profit. And it's really the thesis has evolved since then. So it wasn't something super planned. I would say it's been definitely much more organic.
And what did the ecosystem look like back then when you were starting to do work in taking companies or taking nonprofits to companies and starting to do microfinance? What was going on in the industry then?
Yeah, that's a super good question. So I'm talking back in 2004, 2005 timeframe. There was definitely a discussion around commercialization, right, of some of these themes. But I think we were definitely the first fund to take a very venture-like approach, at least in microfinance. And even in what I would call early stage investing, and again, I'm talking about 15 years back, there very little ecosystem. And if you ask me, I mean, just the evolution of the ecosystem, both in India and Latin America, since we first started, has evolved so much more. But back then, it wasn't that obvious, right? What you usually saw I mean, we came in as a, LP backed fund, again, with all the structure that you need for that. Usually, we were co investing with the typical friends and families and kind of high net worth individuals that had always been some of the angel investors and backers of these companies. Now, dial forward 15 years, if we are doing co-investments with some, it's actually professional investors. So the ecosystem has evolved. Back then, there wasn't an ecosystem. And again, in microfinance, Compartamos had not gone public. It did, and then the sector really started moving really fast. Yunus had not won the Nobel Prize. It did, and again, we saw really an inflow of capital into the sector, which was fascinating. We knew it was going to come. We just didn't expect it to come that fast. But it was great because we had great positions, and there was a lot of for-profit capital that then realized there was a huge sector in which to invest.
What were some of the biggest lessons you learned from that first $24 million fund, either on the raising the fund side or just from the operating side?
Hmm. So I guess the funny thing there that I would say there is, I think that first fund perhaps was the easiest fund to raise. And again, we're in our fourth fund and we have track record, et cetera. And still, I think at that point, we just had a big idea, right? We had no track record to show, but just a great pipeline. And I think there was this. We were really, early in this market, and it was actually a fascinating fundraise. And fundraising has definitely gotten more difficult, though there's more pockets of money, which is great, but there's a huge education that needs to happen at the sector. And as we've gotten a track record, of course, we're underwritten as any other venture fund. I think in terms of operations, the biggest lesson I would say is, well, first of all, initially with such a small fund, we were thinking that we were going to do, say, 15 to 20 investments. What we quickly realized as we were investing the fund was that these companies, if they did well and they were doing very well, would take a lot of capital and do follow-on rounds. And so we realized the importance of those follow-on rounds and also being a player in those follow-on rounds. So we definitely cut back the initial target number from say 15 20 to 7, and we just started to make sure that we were part of the follow-on rounds, always bringing in external investors. But I think it's very important to continue the journey with your entrepreneurs, to continue to be a voice, at the level of the shareholders, but also at the level of the board. I think some of the biggest problems we've had is when you don't have that voice. And again, we're impact investors, and there's something about making sure that you're always keeping true to the client and being client centric, and that's kind of the view we bring in. So you need to be part of that conversation. And so I think just ensuring that you continue to back your winners and that you continue to have those reserves and follow-ons is something that is extremely important.
You mentioned making sure to stay true to the customer and to the client. In successful companies, whether they start out as impact or not, will attract non-impact capital, people that don't
Hmm.
necessarily have any attachment to impact. How does that work when you've invested previously, and how do you make sure that you still have the values and the goals that you originally invested in stay true to
Yeah.
in the company?
So some of our best co-investors are completely for-profit mainstream investors. And I think the alignment comes in them really understanding the business model and the strength of the business model, and the fact that the business model is basically has been tailored and built around a client where there is already a pent-up demand, right? And it's a client that has huge growth. We work only in again countries and sectors where there's going to be scale. So I think if you understand that business model, then there won't be any conflict around saying why don't you go and move to a different type of client, right? Because I think the innovation of the businesses that we focus on is in fact in that they've actually figured out the distribution model into this, again, communities and huge groups of emerging clients, right, and customers. And if you get that distribution right and you get it at a level of a price that is affordable, then scale is going to come. And with scale, you're going to get to the financial metrics and as well as impact metrics, because they go hand in hand. So I think that there shouldn't be a tension or a conflict with that. And any for-profit commercial investor that understand that business model, that's the strength of the business model, then they're going to support the direction of the company that way as well.
And how do you think about impact investing in general? Like what to you constitutes impact for a company?
That's a very broad question. I cannot talk about impact for other people or how people have defined impact. Of course, impact investing is now a well-known term, but it's widely used, right? I can define what impact means for Elevar. And again, we've been doing this for a very long time and have been very authentic about it. For us, again, as I said, we really are focused on underserved customers and on understanding what their needs are and just making sure that our thesis is within and really focused on those needs. And so, from our perspective, kind of you think about our impact framework, the first pillar is going to be who's the client and what is who's the community that's being served, and that defines, as I said, it really goes hand in hand with the business model because the business model is created to serve that client. And so the business model is, what's unique, and what allows this business model to, again, serve those clients with the right price point and the right quality. And then the third pillar is going to be scale. And so for us, impact is really delivering those services to these people, and by doing so, you empower them, as well distributing capital. Right, we're taking capital from investors that want to align also their mission and their views of the world to where their money is being put, and we're taking that capital and we're actually pushing it into these communities that, it's amazing the use and the impact that that capital could have within these communities. So it's kind of democratization of capital, and with that, we believe in both returns, and we believe in both measuring impact as well.
And did you start in out of Fund One immediately doing both India and Latin America, or was there one first and then quickly to the other?
It was mostly India. We did a couple of investments in LatAm, one in Brazil, which it was a fast exit, it was a good exit, and one in Mexico. So it was really, what we realized is that we really were early in India and in microfinance, and we just had great opportunities there. So it initially was really, really India focused.
So after the first 24 million fund, what happened next?
Mhm. So after and this is back again, I'm talking about the 2006 timeframe. There was a lot of momentum in the sector. Again, we were early, a lot of capital coming in, and we realized that, again, there were much larger funds, which much deeper pockets than we are now, looking at these assets and paying much higher valuations than we were comfortable with, which was great because, again, we already had assets in the market. But we also realized that some of our initial theses around microfinance were not necessarily panning out. So an example of that is, initially in our pitch, right, to the Fund One investors, we really thought microfinance was going to be kind of this huge platform that was going to be able to, that was really the first formal relationship between this client and some of the global networks, right? And they were going to be able to deliver all kinds of products. And when we started, investing in these companies, and they were growing at 200, 300% per year, what we realized is that they were very good at growing on a very standard cookie cutter product, right? And business model. And that was going to take them to huge scale. But it was really hard to refocus that organization and some of the processes on the product development side. We're now seeing it more, 15 years later, but really back then, it was really, people were growing on their very core product. And then, being on the field, we realized that there were other needs that the microfinance companies were just not going to meet because of their focus. And so, for example, small and medium enterprises, right, did not need a $300 loan. They needed $1,000, 2,000 more. And so what we decided there, and this was our thesis for the second fund, was to break up away from microfinance and see what other needs we saw within the customers and the communities that we were working in, and find just amazing entrepreneurs that were investing into this, like, create a business model around what we were identifying. So that's really where SME finance started. Low income housing and financing for low income housing began as well. And we did still do a little investments in microfinance, but also went into payments, for example. And that's a fascinating example, where we looked at a ton of payment companies in India and realized that we had one in Latin America, Peru, which is Global Gas, and that regulation, their ability to have multiple banks behind. There was just the way that the market was structured and they were structured, just what was a much better investment than any that we had seen in India. So we did an investment in payments in Latin America, and that what really was the evolution of the second fund.
And what kind of companies, or what were some examples of some of the companies that were your favorites out of either Fund Two or just in general that you've invested in so far?
I have so many. Let's see. Any fund or fund two? Sorry, let me.
No, we can do just any of them, so you don't have to think too hard on which which fund it came from.
um, Let me maybe talk about one in India and one in Latam, right?
Perfect.
Um, and by the way, I mean, we definitely have done much more investing in financial services. We know them well, but the way that we've approached other investing in other sectors is actually investing first into those sectors through the financial lens, right? So, for example, in education, we did Varthana, which is a company that invests in affordable schools in India or Mexico, a company that funds university students. So we go through the financial lens and then understand the sector much better. And then we've done actual investments in that sector that do not necessarily come from a financial kind of services perspective, but actually delivery of services, of content, or whatever it is. But in that sense, one of my favorites in India and the most fascinating, I think, platform we have is a company called Samunati. And what Samunati does is that it actually lends to the whole agri supply chain. So they've actually looked at a tons of verticals, whether it's milk or different produce, et cetera. And they've really come to understand. So instead of going and saying, okay, I'm going to lend to the farmers or, directly and kind of take that risk, what they've actually understood is what are the different players within that supply chain and the different nodes, right, within that supply chain. And so if you lend through say the aggregators, who then unlend to the farmers, they've been able to reach a lot of scale with also much more information of whom to lend to, how to lend to, like reduce their risk. And it's a company that's done amazing work in the rural areas in India, again, lending to disaggregators and that then on lend to thousands of farmers with an amazing quality. Because I think when people think about agri and financing, there's always a concern that you're just not going to have the quality of your portfolio. Their quality is outstanding. And through them, we're really learning a lot about the agri space and who are the different players and how does the supply chain work. And that's also informing our thesis in the agri space. So that's one example in India. In Latin America, let me talk about Credit Justo. So this is an investment in which we went super early. In Mexico, usually we're kind of a Series A. This was a pre-Series A. It was a small check for us, but we were just fascinated by what the team was doing. It's within the theme of financing for SMEs and within the theme of, you know, in general, SMEs in Latin America and their importance as an economic unit, right, within the economies, and the fact that there's a huge productivity gap between, say, the smaller SMEs and the larger medium enterprises and large enterprises, and how to close that gap. But what Credit Justo, and we have seen tons of models trying to lend to small and medium enterprises in Latin America. What fascinated me of Credit Justo is that this is a team that actually figured out how to take a first lien on an asset and kind of, but the realization is that a lot of the SMEs do have assets and real estate assets, for example, and how to take a first lien on that asset, unlock the potential, right, of the asset and lend against it, and therefore really be able to offer them much larger loans. They basically lend between 100,000 to 150,000 to, again, these SMEs that do not have access to banks, or if banks are even looking at them, will take 12 months to underwrite, and these guys can do it in a couple of days. I mean, if anything, weeks. And they can do that because they've also increased the efficiency of the analysis, but also taking that collateral and a first lien on that collateral. And by doing so, what they've been really smart is that they have very affordable rates and they know how to work. They really understand the client. They understand that an SME is not completely online. There's kind of an offline and online component and an informal and formal component to SME. So they work through also a network of brokers or people that are close and know SMEs really well, and that also gives them, the advantage of having a very low client acquisition cost. So with that, they've been super successful. There's of course a technology component and kind of data component that they add to all of this, but those are two examples.
And one of the things that's always interesting when I talk to people outside of Latin America about fintech and financial inclusion is, we'll talk about someone needing even $5,000 in an SME or as a person, and they'll say, well, why don't they just go to the bank and get it? Because they're going through their US lens. What are some of
Yeah,
the biggest or most surprising things that you see in Latin America or in India that people in the US just take for granted, that they'd say, this is crazy, why don't they have X in the
I
finance
know.
system? What are some of those
I
examples that you've seen?
I mean, it's all kinds of products, right? I mean, I'll give you so whenever we're going to do an investment, we go to the ground. We talk to the end customer. That's us. I mean, I'll be to tell you to surprise. I'm surprised that a lot of funds in their due diligence do not go to the field and to the ground to really talk to the end customers, but we do, right? And so when we're looking at Rey Justo, for example, we went and had lunch in this Japanese restaurant, which was one of their clients, and the owner of the Japanese restaurant was fully banked individual. So he had a relationship with one of the large banks in Latin America, had a credit card, etc. However, as a business owner and trying to get approved a loan so that he could expand the restaurant and add other stuff, he was not able to get that financing. The business, maybe he had taken over the business, so it was less than 2 years old. Maybe the collateral wasn't perfect. I mean, it was just the banks. They have all these levels, right, of complexity and bureaucracy in the way that, again, this is a client that on the individual basis was banked, but could not be banked on the business. And I think this is, you know, a lot of what the SMEs, even if at some point the bank is going to look at them, if this is your lifeline, and say you need a machinery and the machinery broke down and you need financing to improve it, you cannot wait 3 to 6 months, right? And so the level of quality, responsiveness, quality that you can bring and improve that services to businesses, SMEs, it's outstanding. And I think, again, versus the U.S., countries like India and Mexico and Argentina and Peru, and they have such a big concentration of it's almost an oligopoly, right, of the banks, and there's a very thin line of other financial services or even non-bank companies, and even if there exist, the rates are so shockingly high that sometimes it's really not a doable. I mean, it's not a product that this companies can afford. So I think it's kind of finding that right combination, and that's a contrast with what you have in the US.
So in Fund Two, things are going well. You're doing a couple of of deals in Latin America.
So
What
Fund
what
Two
goes
is
next?
fully invested, and
Hmm.
now we're exiting, and we have a number of exits there, but we need to exit, and build up that track record. That's it. Fund One is fully divested. We've exited that fund. We've returned money to our LPs. Again, we're in exit mode in Fund Four, Fund Three, Two. I'm sorry, and then Fund Three is fully invested, and we're growing those companies. And really, we're investing out of Fund Four.
And how how do you look at exits in Latin America with the companies that you've been in? A lot of people will talk about how there's very few exits, or there's not enough, or it's really hard, so they shy away from investing in the region. What's been your experience?
Yeah, yeah. Again, we should be in the exit business, not the investing business, right? Because one needs to exit and return capital. Exits are not easy, especially in the regions that we work with. There's definitely much more liquidity in India than in Latin America. Having said that, I would say it's changing. Now you have an ecosystem, you have players. I mean, SoftBank just announced it's kind of a huge bet on Latin America, and kind of what that could have, and the implications of that in fintech could be interesting. But where I would say most of the exits will come in LatAm will be, I mean, there's going to be exceptions. There's going to be a few IPOs, maybe in markets, especially like Brazil. But I do think that there's a lot of strategic. There are a lot of financial, right, investors, mostly big private equity groups that, again, their appetite starts at a check size of 80, $100 million. And it's hard for them to find a good deal. So I think if one can build like very large, scalable, solid companies, there will be an exit either to a strategic or at least to a financial buyer. And, again, there's going to be some unique companies that may go public.
And you mentioned SoftBank, Japan. Do you see, for places like Latin America, do you see kind of the new exits coming from places like Japan, China, Singapore, or more from the region itself?
It's so we'll see. I do think that there's a lot of companies that are gaining interest in the region, and I wouldn't be surprised that a lot of the exits do come from, as you said, those countries that you mentioned. I also think that in general, I mean, even from US, some of the large, very successful companies are eyeing the region. The question is, do I go in directly, or do I go through an acquisition? My experience in the past has been that it's interesting, for them to come through an acquisition. It's not always that easy to get the local component, which our companies do have. So I think that's the case. For our experience has been more financial in kind of investors, but we've also had a number of term sheets from strategics, and they have been mixed. They've been strategics from kind of regional or global strategics, or also kind of country specific strategics.
And why do you think people should be looking at Latin America right now? Why is it an interesting region to be investing into?
Um, I mean, from a very, very macro perspective, I think that there's characteristics of the region that make it extremely interesting. I think kind of you look at demographics, uh, kind of in terms of just from a consumer perspective, but also from a workforce perspective. I think that that's super interesting. The penetration of mobile and cell phones, super interesting. Where we are in kind of e-commerce and the potential there is extremely interesting. The perspective of kind of where we are in financial penetration and where that needs to go, right? So I think that there's a lot of opportunity that's emerging from a micro perspective. That's where we're seeing kind of this emerging class and this kind of customers that are demanding quality products, and then we've seen the resilience of the communities with which our companies work. I mean, even if there's huge macro disruptions, our companies are able to grow, and the clients continue to be there. So I think if you marry kind of those perspectives, it continues to be a huge region. It's a region that of course will go with the risks and the ups and downs, especially right now on the political front as well. But I think for Andean, that's what we do. We take a long term perspective, right, on the region, and there's just a lot of potential there.
One of the other issues that has gotten a lot of press and a lot of people talking about in the last year or so is inclusion for women, both as investors and as founders.
Mhm.
Being one of the more active female investors in the region, what's your take on it?
Great. Yeah. So, um, women and investing in gender lens. So there has been quite a bit of efforts lately on this topic. IDIDB is pushing a huge initiative under genderless investing, and there's a lot of cohorts and working groups pushing this, and I've been working with them, and they've interviewed me, etc. I would say for any endeavor effort, be it a company, be it a board, be it an investing practice, it's I do think that adding a woman and the perspective of a woman in general will lead to better decisions. It's going to be additive. um, we've never had a policy of saying, our entrepreneurs need to be women. At the end of the day, we're just looking for the best entrepreneurs that, care care about their company, care about growing the company, care about impact, and can execute. That's been our position with entrepreneurs. Thankfully, I would say in the past few years, we're starting to see more women entrepreneurs. So something happening in the market where, again, we're getting at least that pipeline. And again, we're not choosing them because of their gender, just because they're extraordinary entrepreneurs. And I would say the first two investments of the fourth fund were women entrepreneurs. So one in Latin America, the other one was a couple, and then there's a kind of a woman co-founder. The other thing I would say, and actually I presented on Finovista on this, and it was women in fintech. One thing I also noticed quite a bit is that there are a lot of women co-founders in the sector. The funny thing is that we don't hear as much from them. So, I spoke to a bunch of people. I spoke to a lot of, again, of this co-founders or people, whether it's investors or people that have looked at studies this, and 40 to 50%. I mean, it was a big percentage had women co-founders, and yet the visible kind of partner and voice and kind of face of the companies were the men. So I do think that there needs to be an effort to bring them up and have them be visible, because I think it just, again, it talks about a potential balance, which I do think leads to better results. But it's also hard to just limit yourself to say I'm going to be investing in women, because you do want to have a big a big pipeline from which to choose from. Now, having said that, what we are doing now at Elevar, and we weren't doing before, is we are looking at not only at the level of the CEOs and the founders, but also at the level of the management teams, and going through that and collecting that data on, what role women plays within our portfolio. So that is something that we're doing much more of now.
Are there any books, blogs, podcasts, documentaries that you like to recommend to people, whether it's about startups or just about the world in general?
One of my favorite books when I was starting investing and just kind of understanding the markets that we were investing in was a book called Portfolios of the Poor. I don't remember who the author is.
We'll put it in the
my,
show notes. We'll find it.
my memory after 40. But that's a great book because I think it breaks a lot of the, established pre-assumptions that people may have of low income customers. And you just realize, I mean, when you're in the field, you realize you have to just let any preconception of what it is. You just have to let it go and understand that the people as they are, and they're extremely entrepreneurial, know how to manage their money, et cetera, et cetera. And so you start realizing a lot of this, and it fits into your investment thesis. And that was a fascinating book. And I guess that the one I've read, which I thought was interesting, I know it's not a new book, but I think it's super interesting for an entrepreneur, The Lean Startup. It's another book that I would recommend. I don't listen to as many blogs, to tell you the truth. So yeah, I'll just stop there.
If you could go back to when you were first...
You're a blog.
Yeah, that's just sucking up. If you could go back to when you first started investing out of that first fund, knowing everything you know today, what advice would you give yourself?
Yep, that's a good question. At times, I think it's about what one goes through different, patience, understanding that investing is hard, that your companies will go through the ups and downs, that entrepreneurship is kind of a lonely journey, and we're entrepreneurs ourselves in a way, and one thing we've learned is that we need to be partners with the entrepreneurs that we partner in. So I think when I first started, you just it's really after over almost 15 years that you see that even at some point where companies were not doing well, we're having great exits from them at the moment. So it's all about working through the difficulties, finding aligned co-investors, finding aligned limited partners, and just finding the right entrepreneurs and investors to really go through that journey.
And what's next for you and for Elevar?
Yeah, so I mean, right now I would say immediately we need to exit, continue to work with our companies, invest fund 4, and make sure that we continue to be an important and leading voice in the impact investing space. It's getting a lot of attention. There's of course a lot of money that's flowing into different funds that have different strategies, but I do think that we play a role there because of how long we've been in the sector and the authenticity of our approach.
Well, it's going to be fun to watch as you continue to execute on exiting out of some of the Fund 3 companies, or Fund 2 and Fund 3 companies, and continuing to invest into Fund 4. So good luck, and hope you have a lot of success going forward. It's going to be fun to watch.
Nathan, thank you. It's always good to connect.
Thanks again for listening to this episode of Crossing Borders with my guest, Johanna Posada. As always, if you like Crossing Borders, the podcast, please share it with a friend so that more people can learn about what's going on in the Latin America tech ecosystem. Be sure to check out latamlist.com for daily tech news updates from the region, and my book, Crossing Borders, to find out more about what it's actually like doing business in the region. Thanks to Angel, Sofia, and Josefina for helping to produce this podcast, and thanks to you for listening. Have a great rest of your day.